What's all this mean for stock picking in the second quarter? Okay, we're dealing with a barbell here. On the one hand, we have a list of companies that can thrive when the economy tanks, and many research houses are forecasting a 30% plus drop in GDP. They're going to study this period forever, man. You got the staples like Mondelez or Pepsi. We're going to hear PepsiCo, they like to call it. We're going to hear from ConAgra later. Yeah, man, they blew away the quarter thanks to Slim Jim and David Faber's favorite, Chef Boyardee. You got drugs like Johnson & Johnson or Bristol Myers, which was nice today. And you got the stay-at-home economy. Tech plays at Zoom and Teladoc, Citrix, Cloudflare, AMD got hammered today. Kind of interesting, NVIDIA. On the other end of the barbell, well, you got the stocks that can thrive once the pandemic is over, which, by the way, does occur. Think Disney, Boeing, Costco, Amazon, Walmart, Honeywell. I'm throwing in TJX because there's so many retailers going to go bankrupt, they can own everything. I'll be shopping there. I got a nice one to be. Long line, but the values are fantastic. I got a pair of black pants once for $7. Different story. The barbell's curiously imbalanced because aside from the staples and a few select techs, not many things are investable when the economy takes a huge header. You can't own the banks. They're too on the hook for mortgages. Can't own the retailers away from the big box winners. Why? Because they're being destroyed by the big boxes. Do you know they just booted Macy's out of the S&P 500 this very evening? Can't own travel or transport because it's a very long time before people trust the process of vacationing again. I was tempted for a moment to buy United Airlines as a hedge, but you know what? Travel. Forget it. Forget it, Jake. It's travel. Airline ETF down 58% this year. Most importantly, you can't touch the oils. When the posted price for crude in the Permian Basin, our main production area, is actually $10 lower than what you're seeing on the screen. It's not the 20 West Texas Intermediate, it's the 10 Permian. These prices will devastate the industry. If we don't get this outbreak under control soon, I bet oil could easily go a lot lower. No one's driving. I expect a host of natural gas companies to file for bankruptcy very soon. A foot race to the courthouse. Same with the pipelines. Don't trust any of those ones with the 10, 15% yield. That's going to be taken from you. Stay away. Even with a call from Trump to Putin, I mean, there'll be no consolidation. People say, oh, well, they'll all consolidate. Solvent oil companies know better than to buy soon-to-be bankrupt companies. They buy them in bankruptcy. They're not idiots. Now, here's the tricky part. I think we'll contain the coronavirus sometime in the next 50 days. This is going to say 30, but the numbers, the Cuomo press guy, I like the Cuomo, but holy cow, man, that's like a Stephen King thing going on there. I think that a combination of social distancing, I'm going to call it from now on physical distancing. I don't like the social. No one's talking to anybody. We just want to be far away from them. Physical distancing. But that doesn't mean we can't just we're going to go back to the old world. Instead, we're going to have to adjust to a new one where fear is still in the air, and we need to stay home much more than we used to and eat a lot of popcorn and Slim Jims. It's a world where we might need to switch back to shelter in place at any moment if the virus starts picking up steam again because it's so evil, cynical, insidious. That's why I like the staples, and I want you to avoid anything cyclical, including autos and housing. I don't see those areas of the economy coming back anytime soon. I like Costco and Walmart because they have the balance sheets to weather this crisis while the competitors drop like flies. If Home Depot and Lowe's get hit, they're interesting too. In the third quarter, I'm betting we'll see a resurgence in consumer tech. That's Apple, Alphabet, and Facebook. No need to rush into these. I'm not trading any of them for my travel trust, but no need to rush into them. We need to make it through the second quarter. And that second quarter is going to be so ugly. I'm going to be coming out here. It's going to be like 2007, 2008 all over again. You know? Hey, I'm Cramer. The bottom line, just like the first quarter, I'm betting the second quarter will be bad. Maybe not as bad as it could be, though. 3 months from now, I think we'll be telling ourselves it could have been a whole lot worse. Still going to be very tough, though, which is why you need to stick with the staples, the utilities, and the stay-at-home economy tech stocks.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.